Welcome once again to my YouTube channel. And before you continue watching this video, please take a minute and subscribe to my channel. Also like and share my videos so that we can have a larger view. So thank you so much. And let me continue the revision of the August 2024 paper. And today I'll do question 21, which was a question and a cash flow. Yeah, we were also able to predict that cash flow will be able to come in this sitting. So I'll read the question. Mzalendo Limited is a listed company. The following financial statements relate to the company for the year ended 31st December 2023. So statement of profit or loss for the year ended 31st December 2023, we have sales all the way to return profit for the year. Then we have statement of financial position as at 31st December. Yeah, we have for 2023 and 2022. So additional information, number one, during the year, the company issued 10 million shillings 2 per value ordinary shares at a price which was 100% above their par value, incurring issue cost of shillings 2 million. Yeah, so they were issued at par. Yeah, so they were issued at par. So it means that they were issued at premium. Yeah, so there was premium. Yeah, there was a premium gain. Yeah, so we'll come to check at that. Then number two, during the year, some items of property, plant and equipment were bought under finance lease amounting to shillings 56 million. Disposals of assets having a net book value of shillings 38 million, realized shillings 42 million. So this 38 million is the net book value. Yeah, so assets are disposed. Yeah, the PPE are disposed at net book value. Yeah, then they realized 42 million. So that means that they were sold for 42 million. Yeah, so they were disposed at an amount of 42 million. Yeah, so there I can see there's a gain on disposal. Yeah, we'll come to look at that. Yeah, so the depreciation charge was shilling 74 million. Yeah, so that's the depreciation charge for the year. Then number three, interest on finance leases of shilling 6 million was included in the interest payable charged to the statement of profit or loss. Yeah, so the interest on finance leases is always a financing item. Yeah, so we'll have to look at that at the financing activities of the cash flows. So required statement of cash flow from Mzalendo Limited for the year ended 31st December 2023 in accordance with IAS 7 cash flow statements. Yeah, so I'll do it. Let me do it here. Yeah, let me just do it here. So you say Mzalendo Limited. Mzalendo. Mzalendo Limited. Sorry. Statement of cash flows for the year ended 31st December 2023. Okay, so I'll create the bottom border. I'll create the bottom border, then I'll merge that. I'll merge and center. I'll also merge this. Center. I'll also merge this. And center. Yeah, so the shillings were in millions. I'll just copy that. So we'll have operating activities. Yeah, so we'll start with operating activities. So we have operating. Then we have also the so we have operating activities. So get the bottom border and bold it. Yeah, so I say that when it comes to cash flow, you start with the profit before tax. So you go to the statement of profit or loss. Statement of profit or loss, it's here. So the profit before tax is here. So just copy it, profit before tax. Then the amount, put it here. What is the amount? The profit before tax, it was 232. Then you adjust for. Yeah, so I told you that when you are adjusting, you go to the items under the non-current assets. Yeah, you check. So we go to the non-financial position and we check the non-current assets. I can see property, plant, and equipment. I can see financial assets, and I can see intangible assets. So I told you that you start with depreciation and these two cousins. That's depreciation, impairment, and amortization. And this, you have to add them back. Yeah, because they are non-operating expenses. Yeah, so we'll add the depreciation. So I'll start with the depreciation. Yeah, so was there depreciation? Yeah, we were given depreciation directly on the additional information. We are told under additional information number 2 that depreciation charge was shilling 74 million. So we have a depreciation of 74 million. Then you ask yourself, is there impairment? So you go to the statement and you check. So there was no goodwill here, so there's no impairment. So you can just write impairment and you say 0, or you just leave it. Then amortization, yeah, we have intangible assets. I can see intangible assets. Intangible assets always amortize. Yeah, they are amortized. So amortization. Yeah, so for this, I'll have to open an account, an analysis account here for amortization. So we say intangible assets. Account. Yeah, so you check the balance brought down. Yeah, that's the balance for the previous year. Yeah, it will be brought down this year because that's what we start with. Yes, the balance brought down, I can see under intangible asset, it was 8. Then there was an additional intangible asset. There was an acquisition of intellectual property, patent rights. Yeah, there was no, there was nothing which was acquired under the intangible asset. So we just compare that with the balance carried down. We see whether there was amortization. So the balance carried down under the intangible assets, we have 6. Yeah, so you can see we have moved from 8 to 6. So the movement is a result of amortization. Yeah, so it was amortized. Yeah, so amortization. Yeah, that's the difference. So we move from 8 to 6. So the difference is 8 minus 6. And that's the amortization value. Amortization value. So it amortized with 2 million within the year. Yeah, so amortization was 2 million. So we say that we don't have impairment. So I tell you that the other item that you check was there whether there was loss or gain on disposal of PPE. Yeah, whether there was loss or gain on disposal of a non-current asset. So in this case, it's only PPE that was disposed. Yeah, so we'll check the loss or disposal. So we're told that disposal of assets have a net book value of shillings 38 million, realized shillings 42 million. So what was the gain? So there was a gain. Yeah, so gain on disposal of PPE. Gain on disposal of PPE. Property, plant, and equipment. Yeah, so it was disposed for 42. But it had a net book value of 38 million. So there was a gain. Yeah, so it's again, I said that for a gain, you deduct it when you are doing adjustment. Yeah, for a loss, you add it back as a positive value. So I'll take the 38 minus 42 million just to get a negative value. So there was a gain on disposal of 4 million. But you subtract that 4 million when you are doing the adjustment. Let me just load that. Adjustment, correct? So we are done with gain or loss on disposal. So I said that after that, you always go to the statement, the stream of profit or loss, and you stand where there's profit before tax, where we started. So you move upwards and you do the adjustment of the non-operating expenses only. The operating expenses, you don't touch. Yeah. So in this case, I'll move from profit before tax. The next item is finance cost. So I'll pick it Yeah, because it's a non-operating expense, so I'll adjust it. And finance cost, I say that you add it back. Yeah, so you add it back the way it is. Yeah, and the reason why we are adding it back because it was subtracted. Yeah, it was deducted. You can see the total of 254 is this 110 plus 130 plus 14. Yeah, so you add it back as a positive figure. So let me pick it. Then you move the next item, administration, no, distribution, no. Then we have interest income. So the interest income is another adjustment that we're going to do. Interest income. So because it was added, yeah, you subtract it. So you just say equals to negative, then you select the 6. Yeah, you select the 6 million. Yeah, so with that, you are done with the adjustment because there's no any other adjustment here. So here, your knowledge, you are supposed to know that you have to adjust depreciation and the two cousins. Then you look whether there was gain or loss on disposal of any item of non-current assets. Yeah, and there was a disposal of PPE. So we had a gain of 4 million. Then you go back to the profit before tax, then you move upwards and you do the adjustment. So with that, we'll have cash flow before changes in working capital. We'll have cash flow before changes. Sorry. Don't know. Let me resume here. My screen was paused. Sorry for that. Yeah, then now it's cash flow. You look at the cash flow before changes. Cash flow before changes in working capital. W capital. You just put it that way. Yeah, you don't have to write it in full. Yeah. Changes in working capital. So allow me to adjust this so that look a bit presentable. So I'll just come here and say equals to. Yeah, I'll sum all this. Sorry. Yeah, so we'll have 312. So we'll go to working capital and see the adjustment. So we'll have bold. Let me bold it and underline at the bottom border. Yeah, so I'll start with the inventory. So I'll check whether there was an increase or a decrease in inventory. And I've told you not more than once. I've told you more than once, sorry, that you check the inventories. So check whether there was an increase or a decrease. And that will help you to analyze whether there was a cash inflow or a cash outflow. So I'll put my equal sign there. So I'll start with the inventory. So you check, yeah, previously inventory was at 330, but now they have reduced to 280. That's a cash inflow. Yeah, that's a reduction. A decrease in inventory is as a result of a cash inflow. Yeah, so we'll have a cash inflow of, so you take 330 minus 280. So it will be positive of 50. So that's a cash inflow. So we go to trade receivable. The next item under working capital, trade receivables. So trade receivable, I'll do the same. So you check the behavior. Was it increasing or decreasing? Yeah, so you treat it the same way you treat the inventory. Yeah, so trade receivable, initially we were 240, but it has increased to 264. So there was an increase. That's a cash outflow. That's a cash outflow. So take that, you subtract that. So you'll have a cash outflow of 24 because there was an increase. There was an increase. The reason being is that when you check at the trade receivable, If they reduce, if the amount reduces, then it means that you are being paid. You are receiving the money. Yeah. So if they increase, then it means that you continue to sell goods in credit, but they are not making payments. Yeah. So you buy, but you are not. You buy for credit, but you are not receiving the payment. Yeah. So lastly, the last adjustment will be trade payable. Yeah, we have interest. Interest receivable. Interest receivable. This will fall under the financing activity. Yeah, so we won't include. It's not a working capital. That's not a working capital. So another working capital will be the trade payable. Yeah, so we'll check. We say that whenever there's an increase in trade payable, then that's an inflow. While whenever there's a decrease, that's an outflow. So let us see. Trade payable. Where is it? Yeah, trade payable. So we started with 254 and it increased to 424. So there was an increase. So that's a cash inflow. That's a cash inflow. Yeah, so that's what we'll have. So we'll have cash flow before tax. Cash flow from operations before tax. Yeah, so I'll sum this. I'll sum all this from cash flow before changes in working capital. I'll have 508. Then I'll look at the tax paid. For that, I'll open a tax account. So I'll come here and say tax account. Yeah, when you have these accounts, it will be very easy for you to analyze cash flow statement. Yeah, so balance brought down, you go to the statement of financial position and you check the tax available. But was there current and deferred? So you check and deferred, you check on current liabilities, there was no deferred. Then current liabilities, check whether there was current tax. Yeah, I can see there was current tax here of 58 and here of 40. So when the balance brought down, so the balance brought down is for the previous year, that's 2022. So we'll have 40. Then you look for the income tax for the year, you add it. Yeah. For the year, how much were we supposed to pay as tax? So you add it there. So you say equals to, then you go to the statement of profit or loss. Statement of profit or loss, and you check at the income tax expense, which was this. It was 64. So let me change it to positive because I want to add it. Yeah, so you'll have that 64. So that you sum these two. Get 104. So you compare with the balance carried down. Yeah, you jump one line, then you say balance carried down was how much? The balance carried down was under the current tax, yeah, because we only have the current tax. The balance carried down was 58. Yeah, so this is how you reason. You say that we were supposed to pay tax of 104, but we have a balance of 58. So it means that from the balance, what we have from the balance, we are supposed to pay 104, but we have a balance on our account of 58. So how much did we pay? So the amount we paid is the difference. Yeah, so tax is the difference. What we pay, tax paid is the difference. Yeah, because I want it to be positive, so I'll take 58 and negative, I'll subtract that. So the tax we pay was 46. So tax paid was 46. Tax paid was 46. Yes, therefore, we have cash flow from operations or operating activities. We will sum these two. Yeah, those two. Yeah, so we'll have 462 as the cash flow from operating activities, and that will be our A. That will be our A. So allow me to Let me bold it. Yeah. Let me bold it. Then we go to now to investing. Yeah, we go to investing. And under investing, I told you, let me just write investing here before we continue. So we'll have investing. So I'll create the bottom border. Then investing, I say that you always move and check the non-current assets. So here you start with the non-current. We have PP. So you ask yourself whether there was there any cash paid on acquisition of new PPE or cash received on disposal of PPE. So you start with that. So I'll start with cash received on disposal because there was disposal. So you say cash received on disposal of PPE, property, plant, and equipment. Yeah, so you go to additional information and let me just, it will be here. So go to additional information. Number 2, they're saying during the year, some items of property, plant, and equipment were bought under finance lease amounting to shillings 56 million. Yeah, disposal of assets having a net book value of shillings 38 million. Realized shillings 42 million. So that's what we realized, yeah, on disposal. So that's what you receive, yeah, cash received on disposal of PP. So it was 42 million. Yeah, then the other item I've told you is the cash paid to acquire PPE. So that one, you'll be guided by the information on the statement of financial position. So you check, at the beginning we had 392, but at the end we have 223. So these are the carrying amounts, also known as the net book value. So this is what you are going to do. So I'll open an account for PP to know whether we acquired some property, plant, and equipment. Yeah, and when we acquire, cash is paid to acquire. So that's a cash outflow. Yeah, so I'll start with PPE there. And let me just bold these headings so that you can see them clearly and also intangible. Well, very well. Yeah, so we'll have the balance brought down. So the balance brought down. Yeah, so the balance brought down for PP, you just get it. That's the net book value at the beginning of the year. So that's for the year 2022. So you just go and pick that. Yeah, then you ask yourself, is there anything that increased the value of this PPE? Yeah, so there was a statement and additional information that number 2, that during the year, some items of PPE were bought under finance lease amounting to shillings 56 million. Yeah, so there was an increase. There was a lease, which increased the amount to by 56 million. So where was I? Yeah, I was there. Yeah, so lease, yeah, there was a lease and this increased the amount of PPE within the year. So there was a lease of 56 million. Yeah, if I'm not, I think it's 56, not 58. Let me just be sure. Yeah, 56 million. Then you ask yourself, whether there was any other. So the other thing that can increase the value of PP is the revaluation. So you go to the statement of financial position, you check whether there was a revaluation. Yeah. Because in this statement, we are not told whether this was transferred to the profit. Because if it is transferred, then we don't use it. So you can see at the beginning we had 0, but we end up with 14. So this 14 is a revaluation on PPE. So it will increase the value, say revaluation. Yeah, it was 14 million. So this also will increase the value of the PPE within the year. Yeah, then from there, you ask yourself, is there any transaction that caused the PPE to reduce in value within the year? Yeah, it is true. And the first one is depreciation. The first one is depreciation. So depreciation was how much? It was, let me see, it was 74. Yeah, so it reduces. So we'll subtract the depreciation for the year. Mhm. Then you ask yourself, was there any other item which might have reduced the amount of PPE? Yeah, there was disposal. Yeah, so there was disposal. And this disposal, you dispose at the net book value or the carrying value. So the net book value I told you was 38 million. So I just say negative 38. Yeah, we dispose at 38, but we realize 42. Yeah, so our income was 42, but you dispose. So this is what you subtract, not the 42. You subtract the disposal at the carrying value. Yeah, so I think those were the only adjustments. I think those were the only adjustments in this question, so that I'll sum this and compare with the balance carried down. So you sum that and you compare with the balance borrowed. So we have 350. So I'll jump one line and compare with the balance carried down if we acquired any. So the balance carried down, you just go back to the statement of financial position and you check that 544. Check that 544. So we move from 350 to 544. So it means that we had an acquisition. Yeah, so there was cash which was paid to acquire. So let me just say cash paid to acquire PPE. To acquire PPE, property, plant, and equipment. Yeah, that's how you analyze this question. So it's the difference between these two. And because I want the value to be negative, I'll start with that. Yeah, so we'll have 194. So I just come here and say cash paid to acquire PPE will be 194. Yeah, so I'm done with PPE. So I'll go to the next item. So you just go back to the non-current assets. You check the financial assets at fair value through other comprehensive income. So for this one, we'll also have an account. Yeah, so that we see the trend. Yeah, so account of financial assets. Yeah, so the balance brought down. Yeah, I can see it was 0. Yeah, but there was no adjustment throughout the year. So I'll jump one line and compare with the balance carried down. So the balance carried down was how much for the financial assets? Yeah, we agree that for financial assets, there was no disposal. Yeah, so we are checking for how much was paid to acquire financial assets. So at the end of the year, we had 190. So it means that it increased from 0 to 190. So the difference is the acquisition. So when you acquire, you use money. So that's a cash outflow. So we acquired 0. So you take 0 minus 190. Yeah, so you said acquisition of financial assets. Yeah, financial asset. Let me just say that. Yeah, then just pick the value because it's already negative. That's a cash outflow. Yeah, then you go and check whether there's any other item. So you check those intangible assets. So there was no any acquisition of intangible assets, but we have realized that the difference was as a result of amortization. So we won't adjust it further. So with that, we get the cash flow from investing activities. Cash flow from investing activities. And that this will form part of our B. So I'll sum this. Yeah, so it will give us that will be B. That will be our B. So cash flow from investing activities will be B. Yeah, then we go to the last part, which is the financing activities. Yeah, so you create the bottom border. Yeah, so financing activities, I told you that you move to the equity and liabilities and you analyze each item along the line. So you start with the first item. We have ordinary share capital. Yeah, and I always love combining share premium and ordinary share capital. But there was additional information number one, which they say during the year, the company issued 10 million to par value ordinary shares at a price of, which was 100 above their par value, incurring issue cost of shillings 2 million. So this statement is just guiding you. This statement is just guiding you that whenever you see there was an increase, then the increase was as a result of issue of new shares at premium. Yeah, so because it was at 100%, it means that they sold these things at 2%. If it was at 2 at full value, it means at 100%, it was an extra of 2. So they sold it at 4 shillings. So it means that the increase is a result of issue these shares at a premium. Yeah. So the first thing you do, you say that cash received on issue of new shares. Cash received on issue of new shares at premium. Yeah, because I'll combine the share premium and what do we call it, and the ordinary share capital. Yeah, so you check. So that this is how you analyze the question. You just check. For this, I'll just do it directly. There's no need of opening an account. So you check. You can see at the beginning we had 220 and 70, but at the end there was an increase to 240 and 88. So you just combine, you just pick this because it's a positive value. Yeah, there was a cash received on issue of new shares. So that's a cash inflow. Yeah, so you just pick this plus this. Let me clear the bracket. Let me close the bracket. Then you subtract the closing, which is 2 plus 70. Then you enter. Yeah, so we had a cash received on issue of new shares of 38. So I've combined ordinary and share premium. That's how you do it. Yeah. So that the statement should read cash received on issue of new shares at a premium. But you can also do it single-handedly, differently for ordinary and share premium. Yeah. So there's no big deal there. So we go to revaluation reserve. Now we have used that. Return profits. So return profit account, we'll open it to help us to know how much dividend was paid. Yeah, so return profit helps you to know how much dividend was paid. Yeah, so return profit account. Yeah, so we take the balance brought down. The balance brought down on the statement of financial position. Yeah, this one, it was 178. But we had the profit for the year. That's the profit after tax. The profit for the year, you add it back to the return profit. Yeah, because it will increase. The return profit brought down. So the profit for the year, profit before tax, profit after tax, that's the profit for the year. So it will be 168. So you sum these two, yeah, and you compare by the balance brought down, whether there was a decrease, yeah, so that we see whether, so we have 346. So let me jump one line and put the balance carried down. Shows how much the retained profit, the retained, where is that? The retained profit was 298, the balance carried down. Yeah, so you can see we were supposed to have a retained profit of 346, but now we have 298. So it means that the difference is the dividend that was paid during the year, the actual dividend which was paid during the year. Yeah, so that's how you do it. So I want it to be negative, so I'll start with the lowest value and I'll subtract 346. Yeah, so we pay a dividend of 48 million. So just come here and say dividend paid. Yeah, and because we are making payment, that's a cash outflow. That's why it's negative. So we'll have 48. Yeah, so that's how you do that part. Then you are done with the equity. So I'll go to non-current liabilities. So we have 6% loan stock. Yeah, so I'll also compare this. So I'll open a loan stock account to check whether there was repayment or acquisition of more loan. Yeah, so just come here and say loan stock account. Yeah. Yeah, this will guide me to know whether there was acquisition or not, or there was repayment. So balance brought down was how much? The balance brought down was how much? It was 80 at the beginning of the year. And there was no any statement that we acquired more. So I'll compare it directly with the balance carried down, which was, the balance carried down was 40. Yeah, so you can see we were supposed to have 80, but now we have a balance carried down. So it means that this only shows that we make repayment. Yeah. Yeah, so there was a loan repayment. And when you repay loan, that's a cash outflow. You're spending money. So we'll take this minus this, then you enter. So we paid loan. So there was a loan repayment of 40. So you come and pick 40. Then you go to the next item, obligations under finance lease. And I can see there was also obligation under finance lease here. So we'll combine the two. So just come and say obligation. Yeah, so we'll open an obligation under finance lease account. Yeah, so we'll have the balance brought down. Yeah, so here, this you treat it the same way you treat tax. Huh? So you check whether there was an item under current and non-current liability. So I can see here there are two. So the obligation, I can see it's 100, it's 84, if I'm not wrong. Yeah, so this is 84. So I'll pick 84 and I'll add to the one under the current liabilities. So obligation under finance lease here, it was that. Yeah, that's the balance brought down. But there was lease, there was lease of PPE under finance lease. So that's an obligation. So you'll add it back. And additional information, they say that during the year, some items of property, plant and equipment were bought under finance lease amounting to shillings 56 million. Yeah, so you add it back, you add it because it increases the obligation within the year. Yeah, so lease, you can say lease of PPE. Yeah, so it was 56 million. Yeah, so we'll have 146. We'll have 146. So after 146, we'll jump one line. So I'll have the balance carried down. So the balance carried down will be equals to, I'll check, yeah, where there was lease repayment, whether there was lease repayment. So I'll check, I'll take the obligation under finance, which is 100. Then I'll add to the one under current, which is 10. So it will be 110. Yeah, so you compare. We are supposed to have an obligation of 146, but now we have a balance carried down of 110. So it means that we paid. Yeah, so there was a lease payment. Yeah, so lease payment or lease repayment. Yeah, lease repayment. Yeah, so from 146 to 110. Yeah, so it means that the difference is what we paid. So I'll pick that and subtract 146. Yeah, so there was a lease repayment of that amount, which is 36. Very well. We continue. Then we go to obligations under, that's we are done. So we go to current liabilities. So bank overdraft, this form part of cash and cash equivalents. Yeah? So we'll deal with it later. Trade payable, already sorted. Then interest payable. Yeah, so interest payable is, we are told there was additional information, number what now, the last number 3, which said that interest from finance lease of 6 million was included in the interest payable. Yeah, so we'll open an interest payable account. So you just come here and open the interest. Yeah, let me just say interest account. So we want to know how much you paid. So start with the balance brought down. So just pick it from what we are given. So it was 4. Yeah, but there was interest for the year. There was interest for the year. There was interest for the year. That's finance cost. Huh? Interest for the year is always the finance cost. So just say for the year. Yeah, so we'll have to say for the year. So it was how much? Let me go back. Interest for the year was finance cost. It was how much? It was 14. Huh? Yeah. Yeah. So you add it and compare with the balance at the end of the year. So we'll have that. I'll sum those two. Then I'll compare with the balance whether we pay any interest this year. Yeah, so we had 18. Let us compare, jump one line and compare with the balance carried down. So from 18, what was the balance carried down? Under the interest payable, it was 6. Yeah. Yeah, so we have balance of 6, but we were supposed to pay 18. So how much did we pay? So interest paid is the difference. Interest paid is the difference. So we'll have 6 minus 18. Yeah, we paid 12 million as the interest. So just come here and say interest paid was 12 million. Then there's something I've realized when I was doing this, that I didn't put interest receivable under the investing activities. So I'll have to include it here. So allow me just to adjust this. See. Yeah, let me see if I can put it somewhere here. So let me just insert. Yeah, allow me to insert that so that I don't interfere with any entry. So interest receivable. So that's an interest income. So let me put it here. Interest income. So I'll also open an account for it because that's the only adjustment. For this we are done. Huh? For this we are done because when you check the all items, interest payable, I'm done with it. Obligation done. Current tax already catered for. So let me just see if we can get the interest income. So I'll open the interest income account. Yeah, to get the interest income, which is an investing activity. Yeah, so let me put it here because we forgot about it. Yeah, when I was doing that part. So interest income, so you go to the balance brought down on the statement of financial position. So the balance brought down, it was put under the current assets, but I said that it is not a working capital. Yeah, that's not form part of the working capital. So the balance brought down was 4. But for the year, there was an interest for the year, interest income for the year. It was on the statement of financial, statement of profit or loss. Yeah, it was there under other incomes. So interest income, it's here. It was 6. So you add it back. Then you sum these two. It was 10. So you check with the balance carried down. So how much did we pay? The actual amount that we paid. So the balance carried down was how much? So you just come here and check the interest receivable. It was 2. Yeah, so it means that we move from 10 to 2. So we paid, the difference is what we paid. Yeah. So the difference is 10 minus 2. So we paid an interest of, yeah, we received an interest of 8. Yeah, we didn't pay. We received an interest of 8. So that's an income. That's a cash inflow. So I'll have to include it here. Yeah, I'll include it here as 8. So let me just copy it from here. Yeah, it's good to copy. Yeah, so that when it doesn't balance, you can be able to adjust. So I'll adjust this. So I'll sum this once again under investing. I'll sum this because this was not captured. Sorry. Let me just sum it again. Yeah, so we'll have 334. Yeah, we'll have that 334 as B now. Yeah, so now that we come to financing, so we'll say cash flow from financing activities. So we'll say equals to, you just sum all this. So that we include, so we'll put this as C. Yeah, so that's the cash flow. Allow me to highlight it. So we'll have bold, yeah. So therefore, the net cash flow will be A plus B plus C. Yeah. Net cash flow will be A plus B. So we'll have A here. We'll add to B, which is this. Then we'll add to C, which is 98. Yeah, so we'll have 30 as the net cash flow. Then we'll check the cash and cash equivalent. And cash equivalents brought down. Yeah, so when you add this net cash flow from cash and cash equivalent brought down, should give you the cash and cash equivalent should be equal to cash and cash equivalent carried down. Yeah, so there we have 30. So after that, sorry. So cash and cash equivalents brought down. So we'll check. You check these items. You have cash and there was also bank overdraft. So you pick for the balance brought down, you pick 2, which is the cash in hand. Then you subtract, yeah, because bank overdraft is a negative. So you subtract 40, yeah, and you get 38. Yeah, so I say that when you add net cash flow from cash and cash equivalents brought down, you will get the cash and cash equivalent brought down. Carried down. Yeah, so let me sum these two. Then we check. Then we check what cash and cash equivalent is. So I'll sum this later, but let me check what cash and cash equivalent is brought down. So we see that whether it balances or not. If it doesn't balance, then we'll have to do it again. We'll look where we didn't adjust correctly. Yeah, so the cash and cash equivalent. So cash in hand at the balance carried down was this 8, but we have an overdraft. So I'll subtract the overdraft, which was 16. Yeah, so I'll get 8. Yeah, so cash and cash. So it means that net cash flow from cash will give us this. You can see 30 minus 38 will give you negative 8. Yeah, so it means that we are correct. Yeah? When you add this plus this, it will give you that. Yeah, so it means that we are correct. So that's how you are supposed to do this question without much problem. Yeah, so with this you are to get your 20 marks. Yeah, you are to get your 20 marks. Yeah, so thank you so much for watching, and our intake is ongoing. Contact me through my number on my bio. Thank you so much and have a blessed evening.